Thanks everyone for coming. It's so great to have everyone here. For those of you that were hoping for lots of singing and dancing, that might be it. So just a fair warning. I'm Niel Willardson. I'm the Senior Vice President and General Counsel here at the Federal Reserve Bank in Minneapolis. It's November 1st, and 28 years ago today rather, I started at the Federal Reserve. So it's great to have everyone here for my 28th anniversary. And I should make a particular point to acknowledge in the front row is the individual who hired me, the former General Counsel of the Federal Reserve Bank of Minneapolis, Shell Azine and Carolyn. So welcome to Shell and Carolyn. Carolyn, rather, thank you. Well, before I get started, I want to kind of get a sense of the audience here. How many of you have seen Hamilton, the play? Good, wow, a great amount. Now, adding to that, keep your hands up. How many of you listened to the soundtrack? Okay, a fair amount. I think we're about 40%. Don't worry, it's not a prerequisite. So, but those of you that have, if you want to join in and sing along, if you hear a lyric or something, feel free. It might just make things a little more interesting. The next thing I want to ask is, how many of you have been to a conversation with the Fed before, one of these sessions? Okay, we got about 30% of the people. Well, it's great to have everyone here. We are also live streaming this, so welcome to everybody out there, including my parents in Worthington, Minnesota. Nice to have them here, my in-laws in Wilmer, and my immediate family is up front here in the third row. So if there's any booing, it might just come from them. So you can maybe try to counteract that with your work. But thank you so much for coming. So let's go ahead and get started. Well, here's why we're here, to discuss Alexander Hamilton and his influence on the central bank. Not only did Alexander Hamilton start the first bank of the United States, but he was a visionary for much of our central bank as it appears today in the Federal Reserve. And he was America's first central banker. And so whether you've seen the musical or not, I hope today the goal is for you to get a little better sense of who Hamilton was and how he influenced the Federal Reserve. I will, of course, allow for some questions and comments at the end. This slide gives you a sense of where we're going today. First, who was Hamilton? What was he about? How did he get started in life? And where did he go with his career? Second, the focus of today's presentation is influence on the Federal Reserve. And it's very difficult to talk about Alexander Hamilton without talking a little bit about Aaron Burr and the duel in 1804. If you've come to conversations of the Fed in the past, and a number of you have, you know that we often begin with a disclaimer. And so I have not one, but at least 3 disclaimers today. The first one is the usual one, which is the words today are my own and not those of the Federal Reserve Board, the chair, or the Federal Reserve Bank of Minneapolis. It turns out Jay Powell's a pretty busy guy. He's working on that FOMC meeting coming up, so I didn't get a chance to clear my remarks with him this time around. The second thing is that I drew heavily for today's talk from a fair amount of research. Of course, Lin-Manuel Miranda's great play, Hamilton, the Ron Chernow 2004 biography of Hamilton, which also was motivating Lin-Manuel Miranda's work, but then a number of financial history articles and books. And because I think I have extensive bibliography, I'm posting that on the bank's website. So when the video gets posted, the bibliography will as well. So if you find something particularly interesting, maybe that'll motivate you to dig further. The next disclaimer is I will make some shameless references to Hamilton the play tonight. So listen for those. Feel free to laugh along or join in song. And then finally, and this gets to the Q&A, because in the introductions, I ran into some people that I hate to say it, are probably more of a Hamilton expert than I am. So there's people from colleges, there's people from high schools that are US history experts. So if we get to the end and I get stumped on the questions, I'm going to revert to Socratic method. And so I'm going to ask the audience for their further support. So I am a Fed history nut, I always have been. And if you look carefully on YouTube, you'll find a YouTube video from me a few years ago on the 100th anniversary of the Federal Reserve. I see 1 or 2 people nodding, mostly family members. There's 409 hits right now out there in that video. And it turns out if I get about 10 million more, the Federal Reserve gets 10 cents from YouTube. So take a look. That's my expertise. But today, I'm talking about Hamilton. So let's move on. This is a map, and you can see here where Hamilton was born in Nevis in the British West Indies. And he was born, it's not exactly clear. He was either born in 1855 or 1857. Or sorry, 1755 or 1757, thank you. That's audience participation, I appreciate that. On his tombstone in New York, near Trinity Church, it says that he died at age 47. So he himself and his wife suggested that he was born in 1757. And I think the reason was, there could have been some uncertainty. Maybe Hamilton really was born in 1757, but when Chernow and others looked at the records in Nevis, they really found it was more likely he was born in 1755. We think that perhaps Hamilton wanted to look a little more like a child prodigy when he was applying to school at King's College, and so that maybe helped support that. And he also was looking for a job as an apprentice very early on, and the younger you were as an apprentice, maybe the more likely you're to be hired. But nevertheless, it's very clear, even though his birth date isn't clear, it was really clear that Hamilton had a very challenging childhood. He was born out of wedlock. Very early on, his father left their family. His mother got sick, died when Hamilton was around 13. And you could say that Hamilton was a founding father without a father, and at the age of 14 founded a trading charter. All right, that's from the play, thank you. And so he was a very industrious person, actually ran a trading company in St. Croix. And where he really became popular and people thought a great deal of Hamilton was while he was on St. Croix, a hurricane hit in 1772. And he wrote an account of that hurricane that was published in the local newspapers and got picked up by other areas. And people were so impressed by his writing and his thoughtfulness that they all took a collection in St. Croix and decided, let's send this guy to the colonies. Let's send him to New York. So he got sent there. And people really saw his great promise. Now, the Chernow book, and it took me, my family knows, several weeks to get through it. It's a very thick book, as it turns out. And there's a huge amount of details about Hamilton's history. So I thought to myself, what is the best way to sort of convey Hamilton in a pretty short form? So I thought to myself, well, what if Hamilton was around today and he was kind of looking for a job? What would he do? Well, he would put up a LinkedIn page. So imagine this is something like 1796. Hamilton's no longer Treasury Secretary. He's returned to New York City and decides, I need to network a little. I need another job. I just got out of this Treasury Secretary gig, and we'll talk about that role in just a minute. So what he does is he talks about who he is. He's a statesman. He's an economist. He's an attorney. He's a policy advisor. He's kind of the whole package here. Entrepreneur, influencer, and you see things like his affiliations. So he went to King's College, which is now Columbia. Went there for a little while. Brilliant student, of course. Originally he was talking about going to Princeton. Hint, Aaron Burr went to Princeton, right? So the other guy went to Princeton. But Hamilton decides to go to King College, ultimately leaves King College to join the U.S. Army and be part of the Revolutionary War. And there, he linked up with some of his influencers. So this is, your LinkedIn buddies, right? So you see some pretty cool people on this list, right? So George Washington, founder of our country, he led the Revolutionary War efforts with Hamilton at his side as aide-de-camp. Washington, of course, sets the standard as the first president of the United States, serving from 1789 to 1797. And then, if those of you who've seen the musical, you notice that Hamilton, when he comes to New York, he meets his buddies in the tavern, right? Miranda does this great job of depicting Hamilton's buddies. Lafayette, America's favorite founding Frenchman, Lawrence, and Mulligan, and he kind of describes them all meeting at the same time in this tavern. Well, it doesn't quite happen that way. It happens over a period of years, but it's a great way to describe their relationship and how he gets to be friends with them. Also on the list, we do see Aaron Burr. We're going to talk about him in a little while, but we also see people like John Jay and James Madison. Of course, those are the folks that helped write the Federalist Papers. So these are something like 85 papers that are drafted, and Hamilton does the heavy lifting, writes 51 of those. And just does a huge job there. Madison writes a bunch, 29, I believe, and John Jay writes another 6. We'll talk about those. in just a second. Now, the other thing that Hamilton's doing, and he can put this on his LinkedIn page, is, yeah, I was there during the signing of the Constitution on September 17, 1787. Pretty cool thing. And this picture is Howard Christie painted this in the 1930s and 40s. And you can see Alexander Hamilton right there whispering to Benjamin Franklin. And Christie does this neat depiction of all the delegates, the key delegates at the Constitutional Convention. What he doesn't do is he doesn't include the 3 that don't sign the Constitution, and he doesn't include the 13 that left during the convention. But it's a neat piece, and there's really a couple key components that Hamilton plays with respect to the Constitution. First, he writes the call for the Constitution. So he's the one that decides, along with some other people, hey, these Articles of Confederations are not really working the way they should. So we need to get together, form a new form of government, and meet in Philadelphia to develop this Constitution. And, oops, I'm gonna go back one. And then the other key point was, although Hamilton was one of those people that was a frequent speaker at the Constitutional Convention, many of his ideas were not taken. They were viewed more like favoring, in some cases, a monarchy type system. He pulled back from those, but ultimately, probably the key contribution that Hamilton made was what I touched on earlier, and that's writing these Federalist Papers. These are a series of papers, and 89 papers that are written over a period of 6 months. An incredibly prolific process that Hamilton oversaw during this key period. And the goal of those Federalist Papers to urge citizens to support the ratification of the Constitution. And they were originally published anonymously in New York newspapers. The basic theme is a Constitution will preserve the Union and empower the federal government to act firmly and coherently in the national interest. And remember that Hamilton was one of those guys that was not born in the United States. Born in the British West Indies, did not have that close state connection like some of the other folks. Jefferson and Madison, very focused on Virginia, and also in their political orientation focused on state rights and also individual rights. So Hamilton was particularly well suited to be influential at the time. And these papers were not only published in the papers, influenced the states and their citizens to ratify the Constitution, but when you look at those U.S. Supreme Court cases where these papers are cited more than 300 times in U.S. Supreme Court cases, so they're cited as authority for interpreting the Constitution. So turning back to Hamilton's LinkedIn page, it's fun to look at Hamilton's, noting that Hamilton's appointment to the Constitution Convention itself came from his father-in-law, Philip Schuyler. And I think people know that Philip Schuyler was the father of Eliza, Angelica, help me, and Peggy. And Hamilton and his wife Eliza were the true classic couple of their day. They're kind of the in crowd. She has wealth and status. He didn't have either of those things, but was incredibly ambitious, had big ideas, and wanted to make a name for himself, was willing to roll his sleeves up and have big ideas on behalf of the country. Eliza was a true partner, and as we'll talk about in a bit, she worked well after Hamilton's death. Hamilton dies at age 47. Well, he thought 49 or 47. And she, well after Hamilton's death, works tirelessly to maintain his position, his authority, his position as a patriot, as somebody who helped form the nation in the most positive way. She lived well into her 90s to try to do that. At the core of Hamilton's LinkedIn page, of course, are his employment roles. He was the aide-de-camp for George Washington. In that role, Washington was well known for a number of his papers and things that he wrote during the Revolutionary War. Well, Hamilton wrote large parts of those. It was really Hamilton's writing. And in fact, Hamilton wanted to get out, as we noted, if people had seen the play, Hamilton desperately wanted to get out to the field and fight. And Washington just kept bringing him back in. It's like, no, I need you here. You're more important here in the audience. Or sorry, you're more important here in the audience. Of course you are. But you're more important here in the office than you could possibly be out in the field. So really focused on that. But so before I turn to the contributions of Alexander Hamilton in central banking, I want to make a little bit of a comment. And it's one thing that, when you look at this list of of contributors and Hamilton's, his colleagues that he lists. And something that we do is, who do you have listed? And it's largely white men, and it's hard not to notice that. And in fact, I was reading a number of things recently about this time period, and there's a couple of things that I want to bring out. One from Thurgood Marshall, the former Associate Justice of the U.S. Supreme Court. The second from Joseph Ellis, a best-selling historian. And Ellis said something I think that was thoughtful. It was recently republished in the Time magazine. Ellis said, when the founders were talking about we the people, they weren't including black people, they weren't including Native Americans, and they weren't including women. And Ellis went on to say, when race or gender enters into the question, the founders are going to disappoint you. And that was Ellis at the time. Thurgood Marshall did a wonderful speech on the 200th anniversary of the U.S. Constitution in 1987. And he said, the founders of the Constitution included what he called intentional defects and key omissions from the start, and especially those involving slavery. In that way, Marshall was advocating, as many do now today, is that the Constitution should be considered a living document. So that was something way back then, but we should look more broadly at the Constitution. So I just wanted to make that comment before we move on to Hamilton's role in the financial institution. So in financial institutions more broadly, in the financial revolution. So George Washington becomes president, 1789. He's thinking about who should be on his cabinet. And he makes some really key decisions. And the first one, when he turns to somebody he's trusted a great deal, and that is Alexander Hamilton to be a Secretary of the Treasury. The other person he turns to be a key member of his cabinet is Thomas Jefferson. So this is going to set up over the next several years a bit of a rift, right? Jefferson's very popular, very thoughtful, but going back to when we talked about Madison, Jefferson was in this camp, viewed the country as better suited through more of an agrarian approach. The idea of finance and commerce, maybe that's okay, but really we should be more individualistic focused, we should be more focused on states' rights. Hamilton, when he becomes a member of the cabinet, starts working extremely quickly to form his Treasury Department. So just to give you a sense of the difference between Hamilton and Jefferson and how they get started, Hamilton, within the first year, has 53 members in the Treasury Department. That doesn't seem like a lot relative to the size of government today, but that's a lot compared to Jefferson's State Department, which has 3 people, right? And Knox's War Department, this doesn't include the military writ large, but 3 people. So Hamilton does an amazing job of sort of building up the staff he feels he needs to effectively run the Treasury Department. And in fact, you could say that Hamilton doesn't hesitate, he exhibits no restraint. So, see, you're picking up on this. I'm really pleased about that. Okay, so this idea of a financial revolution comes from Richard Silla and David Cohn's book. And he notes a couple key things about that. First is that public finance is a part of the way the country should run, and the idea that there needs to be revenues and spending from government for there to be an effective country writ large. There should be a central bank that aids the government finances and also serves as a node to banking more broadly. The dollar should be a unit of account and a medium of exchange. There should be something within the country. At the time, there were various foreign currencies, various types of medium of exchange that were taking place. There was really no common currency at the time. And Hamilton had a view, and he exhibited this again through some very detailed papers, that the country's growth could be fostered through business, through banking, and through markets. And then he has a specific plan, and one of the key aspects of his plan is to say that the assumption of war debts of the colonies was really expensive to run the Revolutionary War. States funded large parts of that. Individuals were owed money from the Revolutionary War, and Hamilton was a big advocate to say, we got to pay those off. A couple reasons why we want to do that. One is we're not going to be able to do a war again if we need to, if we don't pay our debts. So people look at that and they go, well, we're not going to get paid, we're not going to be able to do another war. The other reason is the whole idea that there's funding for running the government, there's the ability to tax, and also debt of the government helps bring people together for purpose of having a federalist type system, a governmental system that's a republic like Hamilton will talk about. So the idea that this would cement federalism and he thought that unless the country had strong credit, that it could borrow money effectively, it would ultimately never be a successful country. So this isn't just about the financial system, it's really bringing the idea of having a federal government, a country that works together for a common set of goals. So he, like Hamilton always does, he's incredibly prolific writer and thinker and a policymaker. And even though we talk about Hamilton's central bank, that word really isn't used until well into the 1800s. He talks about a national bank. And there were, if you saw the slides earlier, there were 3 banks at the time. They were state banks, but the idea of a national bank with some components of the embedded components of the financial plan, and that included the concept of a US currency, the idea of a fiscal agent or the government's bank. And these are concepts that really began with Hamilton, and some of these things, of course, currency and fiscal agent are the types of things that still are part of the Federal Reserve today. Okay, well, it sounds self-evident, right, that we should have this. I've made the case on behalf of Hamilton. Turns out not everybody agrees. Democracy, just like today, is a little bit messy in the 1790s, and Hamilton thought what he has a good idea, but there were more than a few people that didn't like it. And these two were among them, Thomas Jefferson and James Madison. They were diametrically opposed foes, right, to Hamilton. They didn't like a number of aspects of the plan, including the idea of the ability to tax. And the disagreement really just goes back to this view of society and the way things ought to go. Jefferson was a farmer, a large landowner. Liberty was incredibly important to him. Democracy, new concept, but okay, but really let's use the states as a mechanism for government rather than a focus on the federal government. And they were concerned really about too much federal power vis-a-vis the states. Going back to Aham and G. Wash, that sounds kind of hip, doesn't it? I was going for that. So you know, Hamilton has these great ideas, and it must be nice to have Washington at your side if you're Hamilton. And this isn't from the play, but I thought this was a nice alliterative phrase that reflects Hamilton and Washington's view. It's constitutional, it's commercial, it's workable, it's economical. So that's the best you're going to get from me tonight on the wrap, but that's it. So then what happens? We've got the ultimate battle set up, right? We have Jefferson and Madison on one side, we have Hamilton and maybe Washington on the other. We're going to see where this goes. So this is where the room where it happened, right? So as it happens, people are hanging out in New York. That's where everybody is, 1790. Jefferson has a place kind of close to Hamilton. Has anybody been to the New York Fed down on Maiden Lane? Anybody been down there? A couple of you have. It's down in the southern, if you get a chance, they have a great gold tour. So we have the cash here, and Joe was kind enough to open up the cash, not open up the cash department, I should be careful. So let you view the cash department. Today, those of you that took the tour, and if you didn't get a chance, you want to take a tour, feel free to let me know. We can make sure to get you in. They have gold there in the New York Fed. And the room where it happened, the place where Jefferson and Madison and Hamilton all got together was at 57 Maiden Lane, right down there by the New York Fed. And this is probably the most important, famous meeting in probably the history of our country. And again, Jefferson runs into Hamilton and says, you know, why don't you come over? I'm going to arrange the menu, the venue, and the seating for us, and we'll get together and talk about it. Well, the room is set up for a discussion or maybe an argument for the financial plan, and this is where the magic of Lin-Manuel Miranda in the Hamilton play comes through. Because what does he do? He's like, how do we know what happened? There were only 3 people there. So the way that Miranda describes this, he says, let's have Aaron Burr describe what happened. He should know, but not really. He wants to be in the room where it happened. So Miranda, when he talks about what happened in the room, he brings Burr's perspective in this. He's the outsider looking in. And those of you that might have signed up for this thinking that I would know what happened in that room, it turns out I know just as much as Aaron Burr. That happened. So I'm a little sorry for the bait and switch. But I'll talk a little bit about what some of the historians talked about during this really key meeting and key time. In what they really describe as a chess match between Madison and Jefferson, and then Hamilton on the other side. Hamilton was really keenly focused on this idea of assumption of debt. It not only was financially made sense, it not only was a promise, but it was ultimately the cement that he felt was necessary to keep federalism together. Jefferson and Madison really hated the idea, but they were willing to entertain a quid pro quo. And what was that? At the time, this is again 1790, there's this serious debate about where the nation's capital should be. There were really three contenders: Philadelphia, where so many important things had happened: Declaration of Independence, Articles of Confederation, the Constitution was signed in Philadelphia, huge population at the time, I think one of the most populous cities in the country. There's New York, which was fast becoming the financial center, so people like Hamilton liked that idea and some of Hamilton's buddies. And then there was Jefferson and Madison that said, well, we have this place down by Virginia along the Potomac, that might be a good place too. And that was really their preference. They were really united in the desire to have the nation's capital on the Potomac River in a location now known as Washington, D.C. So the story goes that Jefferson and Madison agreed to the financial plan in exchange for the creation of the nation's capital in D.C. What happens then is the legislation does pass 39-20 and is sent to President Washington for signature. Under the law at the time, Washington has 10 days to sign it. So Washington's pretty smart, pretty savvy, great politician. So he says, you know what, let me do this. Let me send that to Jefferson and my Secretary of State and my Attorney General Randolph and see what they think. Well, you got a pretty good idea what Jefferson's going to say. He doesn't like it, and he now puts forward a constitutional argument, as does Randolph, and says, you know what, there isn't anything in the Constitution about all this stuff. There's nothing in the Constitution about a national bank or a central bank, and therefore we think it's unconstitutional. Again, 10-day period. So I don't know what day that so Washington packs up the opinions of Jefferson and Randolph and sends them to Hamilton. And you think, well, Hamilton, how much time does he have? This is like homework. You know, you have like 2 days to write your views on constitutionality. And you would expect that maybe Hamilton did a little pre-work. But Hamilton promptly pulls an all-nighter. And yeah, right? You know what this is like, right? Students in the class, like, yeah, pull an all-nighter. He pulls an all-nighter, writes this beautiful piece on the constitutionality of the national plan, and says, you know, every power in the government includes a mean requisite and applicable to the attainment of the ends, such that the power for a national bank is implicit in the Constitution. It isn't necessary to be expressly noted in the Constitution, and that view is one of those things that carries its way and makes its way into various U.S. Supreme Court cases along the way. Washington signs the bill on February 25th, agreeing with Hamilton, and the next day, he signs a bill that provides for the residence of the Capitol in Washington, D.C. This is an early depiction of the Capitol. Okay, so we signed the bill and the National Bank, and it opens its door shortly thereafter. And this picture just gives a high-level overview of the National Bank of the United States. Hamilton proposed it in 1790. Washington signs the bill in 1791. The bank stock then goes on sale, sells out within hours. There's a panic. We'll talk about that in a bit in 1792. And 20 years later, 1811, it closes down. So there was only a 20-year period for the first Bank of the United States, or at that time it's just called the Bank of the United States. It's just like the Great War becomes the First World War after you have the Second World War. In the same way, this is the Bank of the United States and becomes the first bank when the second bank comes around later on in the 1800s. The basic principles of the Bank of the United States are still some of those foundations that led to the Federal Reserve, and that's where we're going to turn to next. So what I'm going to do now is proceed to fill out this chart. If you're like me, you'd like to have like a checklist, right? So you have get the groceries, do the laundry. We're going to walk through some of the key components of the Bank of the United States using core ideas of governance, talking about leadership, talking about their roles and responsibilities. And what I hope to have you get from all this is where there's great similarities between, there's a pretty good chance this will be dropped, by the way, between now and the end of the day. So be ready. For those of you in the front row, that might be a bonus. I don't know. But so you're going to get a sense of those areas where it's very similar between the Bank of the United States and where there's some considerable differences now with today's Federal Reserve. So let's just start with the office. The main office of the Bank of the United States is set in Philadelphia, and even though Alexander Hamilton was not a fan of branches, ultimately agreed to it because the shareholders of the Bank of the United States thought we should have branches all across the country. And the picture up here shows the dots where those branches are. Of course, they're all along the eastern seaboard. The first one is in Boston. The last one is down in near the New Orleans area. And that's the general format of the Bank of the United States. The Federal Reserve, formed in 1913. Woodrow Wilson signs the Federal Reserve Act on December 13th, 1913. The Reserve Banks opened in 1914. As you might expect, yes, there was a fight between Minneapolis and St. Paul about where that should be. Minneapolis won this one. You know, later the hockey team would go to St. Paul, so maybe, who knows, maybe that was a good deal, I don't know. But so we end up with it here in Minneapolis, and you can see the picture of the Federal Reserve. Again, thinking back, this is 1913, we see a little bit of an Eastern influence here. Our 9th Federal Reserve District is here. We have Montana, North and South Dakota, Minnesota, the Upper Peninsula, Michigan, and Northwest Wisconsin is part of our district. It's a fairly large geographic district. In terms of population, it's a little over 1% of the total US population. We have a branch in Helena, Montana. There's another 23 branches in addition to these reserve banks all around the country. We are a corporation of the United States, formed under the Federal Reserve Act here. So if people say, I work for the government, I say, well, not quite. We're a quasi-governmental organization here at the Federal Reserve Bank of Minneapolis. The Board of Governors in Washington is an independent federal agency. So they are an agency, those that oversee us here at the reserve banks. Let's now turn to shareholders, and it gets a little bit interesting here. As soon as I can make it interesting here. There we go. I'm going to go back one. The Bank of the United States had a substantial capitalization when it was formed, and it was in fact, the largest corporation of its kind, of any kind, when it was formed back in 1791. They capitalized with initially $10 million capital, which is a very large amount, especially if you think about inflation and the size of the organization. And when it was set up as a bit of, again, a quasi-governmental concept with 20% of the stock held by the government, but the remaining 80% of the stock held by individuals. So there was literally a public offering back in 1790 and 1791 for the stock of the Bank of the United States. And honestly, by all measures, this was messy. There was script issued that would ultimately lead to the purchase of stock. It was originally listed at $25, went up wildly to something like $300 a share, then shot back down to $150 a share. And in fact, this was sort of the first opportunity for Hamilton to get involved in crisis management because there was some severe problems in the credit market that were caused in places like New York. Ultimately, things settled down and things went relatively well thereafter. There was a later crisis in 1792 that was some individual trying to basically corner the securities markets, the credit and debt markets at the time. Hamilton made a similar move to purchase securities in the market. And now turning to the Federal Reserve, I think something was learned through that process in the 1790s. And when the Federal Reserve Act was formed, the idea that there'd be some initial capital that's owned, ultimately that there's ownership, but that ownership is by member banks of the United States under the law. So member banks are the shareholders of the Federal Reserve System, but when you think of share ownership of control, that's not what member banks have here. What they get in return for their capital investment in the Federal Reserve System is a 6% dividend. Or in the case of the largest bank under recent legislation, something more like a 3% dividend. And that for the latter, there's a calculation that makes that happen. But I just want to make sure that there's really no typical control of those financial interests. It's really a public institution that has a stock ownership by the member banks. Then looking at other aspects here. This is a picture of Thomas Willing. Originally, the first president of the bank was offered to Oliver Wolcott, who had a significant job in the Treasury Department. And it turns out this individual was willing to serve when Wolcott was not. So that's Thomas Willing, who was willing to serve. So yes, so that's that individual. He's the president. There are 25 directors that are chosen by the shareholders to be the directors of the main office in Philadelphia. And not surprisingly to some, they were largely in New York and Pennsylvania. So the most moneyed areas of the country at the time, the most financial functioning areas of the country had the large parts of the directors. And there were other states that had one or two, but they were largely based in Philadelphia and New York. And then Hamilton himself wrote the bylaws and the articles. I mean, for those of us that are sort of like governance geeks, it's kind of fun to get down and craft those. Hamilton himself writes these documents. And one of the things he says is, we think about a quorum requirement, went back to look at this, and there were 25 directors, but there were only 8 required for a quorum, right? And you can probably guess why. Travel, right? So you have to get there. There was no telecommunications. There was anything like that, so everyone had to get to the place. And you can imagine it might be difficult to get a quorum for a real meeting to make things happen. So a very large number. Each of those branch offices that I showed earlier from Boston down to New Orleans have another 13 directors. Well, that's in contrast to the Federal Reserve. The oversight of the Federal Reserve is by the Board of Governors, currently 4 governors. They are nominated by the President, confirmed by the Senate. So we only have 4 right now. Jay Powell is the chair of the Board of Governors. They oversee the reserve banks. And then each reserve bank has a set of outside directors that I'll show you in a minute, 9 directors that are public directors, not insiders to the Federal Reserve. And then this charter, as we noted earlier, there's a 20-year charter for the Bank of the United States. The Federal Reserve, interesting, a lot of people know this, when it was first formed by the legislation in 1913, had a 20-year charter. Because people went back and said, well, we got to see if it works. We want to see if we want to keep it around. Let's make sure that it gets renewed. In 1927, under the McFadden Act, Congress decided, let's remove the 20-year limitation, instead have an unlimited charter for the Federal Reserve System. Now that does mean that if Congress decides at some point they don't want to have a central bank, you can go through that process to decommission the Federal Reserve. But for now, there's basically no expiration to the Fed. Okay, let's talk about leadership. No, these are not the directors from the Bank of the United States. These are the directors from our main office in Minneapolis and our Helena branch. Really proud to have such a wonderful group of directors. Our current chair is Ken Powell, the former chairman and president of General Mills. We have a number of other folks, Kathy Nessett, who works in the oil business in New York, Sri Zahir, the dean of the Carlson School, Harry Melander, who works in the labor area. We just have a wide range of people with various industries in various segments of the country, the district of the Federal Reserve Bank in Minneapolis. So it goes all the way from Montana to Wisconsin and Michigan. And then our Helena branch directors are all folks from Helena. In the Bank of the United States, they thought it was important to have staggered terms. Likewise, these folks have 3-year terms, and they can serve up to 2 or 3-year terms, and then they move on. There's Thomas Willing. That is not Thomas Willing. That's Niel Kashkari. So I've got a bigger picture of Niel because I thought it was important to have your boss in really big picture. So that's Niel Kashkari. And after Niel started 2 years and 10 months ago, I somehow became the other Niel, by the way. So, or N-I-E-L. I'm fine with that. I'm a behind the scenes guy, as you can probably tell already. But Niel is our president and CEO. This is really a key role. He not only serves as a president of our organization of 1,100 people in Minneapolis and Helena, but he also is our representative to the Federal Open Market Committee. So every 6 weeks, our president goes to Washington, takes information from our board of directors, on the ground information that they give us about what's happening in their sector, what's happening in their district, and uses that information to help inform the discussions at the Federal Open Market Committee table. And that consists of the governors, 7 governors, now 4 right now, and then the presidents on a rotating basis are voting members 5 people serve on the FOMC as voting members, but all attend and provide that information that they receive from the directors. So that gives you a general sense of the directors. Now I want to turn to the scope of responsibilities. And I've noted here where there's some similarities between the Bank of the United States and the Federal Reserve, where we are the government's bank. Right here at the Federal Reserve Bank in Minneapolis, we are the site that provides the distribution and servicing of Treasury securities, savings bonds, and the like on behalf of the country. So that's a role that we play, among others, as the government's bank, the Federal Reserve. The Bank of the United States had some even more governmental functions, like the collection of taxes took place by the Bank of the United States. Just so you know, I'm not collecting tax. So if you get a call from somebody saying you have not paid your tax and you should send it to this place, that is not from me. And in fact, that's a scam if you don't know. Public service announcement, the IRS will not call you on the phone, tell you that you owe them money, nor would the Bank of the United States do that because, as you know, there were no telephones at that time. So, public service announcement completed. So those are some similarities. Where there are some differences are in areas like monetary policy. The concept of monetary policy was really not part of the Bank of the United States. They weren't thinking in terms of the economy. They weren't thinking in terms of interest rates. They weren't thinking about the dual mandate of employment and inflation that really guides the Federal Reserve. This is a picture of Jay Powell, the chair of the Federal Reserve. People know Janet Yellen was Jay Powell's predecessor. Prior to that, Ben Bernanke. So probably names that are ringing a bell to you. As I mentioned, next week is the FOMC meeting, and almost always those are Tuesday and Wednesday of any given week. The announcements typically taking place on Wednesday. Next week, because of elections, it's going to be Wednesday and Thursday. So you'll see that Federal Reserve announcement on Thursday, whatever it is. And of course, I would not tell you what that was, even if I know, and I don't know what that's going to be. So monetary policy is a key part of the Federal Reserve's role that was not part of the Bank of the United States. And then bank regulation. This is a picture of Randall Quarles, who's the vice chair in charge of supervision at the Board of Governors. And the Federal Reserve is responsible for supervising member banks. These are state member banks. It's also charged with supervising bank holding companies. And firms in this area that might spring to mind is organizations like TCF and U.S. Bank. The Federal Reserve is responsible for supervising the holding company, but not the bank itself. The bank itself, in those cases, is supervised by the Office of the Comptroller of the Currency of the Treasury Department. So we have a key role in bank regulation. And then in the area of payment systems, this is a picture of Lael Brainerd, also a board member. And the Federal Reserve has responsibility for the distribution of currency and coin. You saw that if you did the tour. We have cash coming in, we count it, we sort it, we make sure that it's not counterfeit, we make sure that it's not worn too much, and then we just package it up and distribute it out to financial institutions on an orderly basis, on an order basis. We also help facilitate large payments between banks, and we act as a banker for the government. So Lael is a key role on has a key role on a number of Fed committees, including those responsible for payments, clearing, and settlement. A couple other highlights I want to touch on, and then we'll open it up to some. I guess we should do something about the duel pretty soon, so let's maybe turn to that next. I wanted to mention that there were financial statements. The Bank of the United States actually had financial statements back in the 1800s. The Fed does a lot more of that, and we get audited. If anybody has a question, our financials are audited. Our former chief financial officer is here. He retired in the end of June, Paul Rimmeride. And Paul would tell you that we're audited several times over. Our current external auditor is KPMG. What's not audited, what's not reviewed in the way that it's expressed this way is people say the monetary policy process of the Federal Reserve is an independent one. So that's for good reason. That's going to be another conversation with the Fed down the road. But that part of the process isn't. But in terms of our securities portfolio, our QSEP numbers for our securities are all online. There's a great deal of transparency, and also transparency in terms of the monetary policy process. Meeting minutes are published. The chair holds press conferences after FOMC meetings, and Chair Powell is actually increasing the amount of transparency associated with the FOMC. I've touched on stability earlier. The Federal Reserve was really born out of crisis. 1907 was a significant run on banks, significant financial crisis, And when the formation of the Fed closely followed that after a huge study by Congress and others to facilitate the process of the formation of the Fed in 1913. I'm going to skip over the discount window function because we have to talk about Aaron Burr. We haven't had a chance to talk about him much yet. And Hamilton and Burr are forever linked through their 1804 Burr duel. And Burr was born in 1756. So he's either 1 year younger or 1 year older than Hamilton. He was extraordinary also in the Revolutionary War. He was an officer in the Army. He served in the war, successful lawyer, successful politician. He served in the New York State Assembly, was a New York Attorney General, served as U.S. Senator. He's got an impressive resume, to be clear. There was a little bit of an issue in 1800. There was a bit of a battle between Burr and Jefferson, tied in the Electoral College, goes to the House of Representatives. Hamilton, even though Burr was kind of a Federalist, puts his name behind Jefferson and says, you know what, you should vote for Jefferson. So it's thought of that was maybe the turning point why Jefferson becomes our third president of the United States and not Burr. Then in 1804, Burr runs for governor of New York, and guess who shows up again? Hamilton. So Hamilton shows up again in 1804, supports Burr's opponent. Burr loses again. See a pattern here? I think we do. While Hamilton pretty close to Burr in policy, he didn't support him because he thought Burr was in it for himself. He felt that Burr ought not to be trusted with the reins of government. In some ways, the duel isn't the most interesting part of the history between these two. The two sort of notoriously exchanged a series of letters prior to the duel. They were very gentlemanly about this process. It wasn't just show up and take a shot at each other. This is not like the Old West. There's a process. And the whole idea was that they'd engage in this time-honored process, often largely to avoid being in a duel. There's a series of letters that I thought about putting up here, but then I thought, what's a more contemporary way rather to describe the duel? So I've asked Joe Mann, one of our economists, to come up here. Where are you, Joe? To help me out. And Joe's going to play Aaron Burr. So Aaron Burr, sir. So the modern day of doing a duel, Twitter war. Am I right? Okay, 10 paces. All right.
Sir, I was going to be President of the United States, and then I was going to be New York governor, and you got in my way.
Dude, you get in your own way. And I only said that Jefferson was by far not so a dangerous man. Admittedly, I did call you a mischievous enemy.
But we had a history, and not a bad one. We both served in the Continental Army.
Yeah, and Washington picked me as aide-de-camp.
It must be nice to have Washington on your side. I spent my time in the field, not at a desk. Aham, I remember a time when I saved you and your crew at the Battle of Long Island.
That was a long time ago, before you ran against Philip Schuyler and for Senate and won. And you know, Schuyler was the father of my beloved Eliza, Angelica, and Peggy.
Okay, but we both founded banks. And I know they're very important, and you know they're very important for commerce.
True. And you know how I like banks. But yours was a water company disguised as a bank, though, and we were both New York lawyers, and in fact, worked together on a pretty famous case.
Yes, but you took the credit, like you always do.
You mean like when you represented Mariah Reynolds in her divorce of James following our situation? That's the PG version of that, by the way. And you were also Monroe's second in a duel challenge when I asked him to believe my version of the Reynolds affair.
Well, at least I didn't write a pamphlet about her. And you. You made your bed, so to speak.
That affair only lasted 525,600 minutes.
Wrong musical, bro.
I just don't believe you're good for the country. No offense.
You have a peculiar talent for saying things improper and offensive.
He's really good.
I have been constantly deceived, and it became impossible for me to forbear. And the last straw? Well, it goes something like this. Charles Cooper was at a party when you slammed me, saying that the Federalists should not support me for New York governor. Send. And then Cooper told your father-in-law that you expressed a despicable opinion about me.
You know, this sounds so high school.
Yeah, maybe. But while we can have policy differences, personal affronts are a big deal. Duel-worthy, even.
Let's hear it for Joe Mann. Wow. Aaron Burr, sir. Well, you probably know the rest of the story. Burr and Hamilton, along with their seconds and a physician and a few others, rowed across the Hudson to Weehawken, New Jersey. The night before, Hamilton writes a letter to Eliza to be delivered one day after his death. Remarkably, his letter and his last will and testament are actually published a week after his death in the New York newspapers. So the whole letters between Burr and Hamilton are published wherever and all over the place. And Hamilton really establishes his position about what happened, what he was trying to do during the duel, rather. Hamilton and Burr did mark out their 10 paces, and the duel took place at almost the exact spot in Weehawken where Hamilton's son Philip had died just 3 years earlier. Hamilton told his second that he intended to satisfy both his religious principles and honor by not firing, similar advice that he told Philip. The first hands of the count disagree a bit about when the two shots were fired, although it appears as though Hamilton fires a shot intentionally above Burr. Burr takes only one shot, hits Hamilton and just above his waist, and Hamilton then says, hey, he basically throws away his shot as a result of that, about his position. Hamilton knew it's a mortal wound. He's rowed back across the Hudson back to his home, spends about 30 hours there, and dies. So he dies on July 12th, 1804 at age 49. There's an outpouring of remorse at the time, and of course, because of Hamilton's visionary thinking, America at the time has the highest credit rating in the world. His wife Eliza is very focused on Hamilton's position, his standing in history, and really spends the rest of her time, in addition to founding a key orphanage in New York City, really maintaining Hamilton's legacy and moving it forward. I want to close with a couple comments about the fact that we think that Hamilton's legacy is really present in today's Federal Reserve. As you hopefully heard tonight, some of the core attributes of the way Hamilton's bank, the Bank of the United States, began, some of the key principles are today present in the Federal Reserve System, made better through the Federal Reserve Bank of Minneapolis and through the Federal Reserve System more broadly, formed through legislation that goes back, signed by Woodrow Wilson back in 1913, and his legacy of public service still stands today in the employees, in the directors and officers of the Federal Reserve. Hamilton found his calling in public service. These attributes are still instilled here in the Federal Reserve. And yes, bold ideas like Hamilton had still live here in the Fed. If you want to learn more about some of those bold ideas, go to Federal Reserve, MinneapolisFed.org. You can read about, if you haven't already, some of our Too Big to Fail plan, our Center for Indian Country, the Opportunity for Inclusive Growth, and others. I want to close there with a few words of appreciation. My research for this talk was supported by people in our research department, our research library, especially Sarah Brandell. Also thanks to Jintong Song, one of our law clerks that was here over the summer from the University of Minnesota. And finally, Pat Hilleman, who's right here, did a lot of the work on the presentation, so I want to express some particularly thanks to Pat. I want to also thank all of you for coming and hopefully learning a little bit more about Hamilton. I hope you, those of you who took the tour, enjoyed it. If those are interested in taking a tour, feel free to take my card and send me a note, and I'd be happy to help work to set one up. I want to close with something from Hamilton's play. In the immortal words of King George III and Miranda's Hamilton, on behalf of the Federal Reserve, we hope that you will be back. All right. Thank you. All right. I left just a few minutes for questions, and I'd be, oh my goodness, thank you, please. So we have a microphone, so Carmi.
When the federal government assumed the debts of the states and other debts, I assume some of those debts were to soldiers who had served in the Continental Army and never been compensated. At that time, were those debts trading at par? And who were the holders of those debts?
Yeah, no, it's interesting. There was basically a set of script that would be passing around. The debts were in some ways monetized, so someone could take their debts and sell them to somebody else. And I think when there was serious questions about whether those debts would be paid, as you might expect, there was a lot of variation in what those prices were. As it became more clear that the debts would be paid, those were sold closer to par. Your other point is a good one, and about the, like in any war, in any military service, taking care of those that gave their lives to their country, and many who suffered injury. There was also an effort to try to provide compensation to soldiers during those periods of time, and people could make basically make their case to the government. Those following the Revolutionary War, which Hamilton's wife did. Hamilton was not paid what he should have been for his war service. Neither was Burr. So each of their spouses made claims for payments on behalf of their husbands. So just an interesting point. Is there another question? Thank you. Bob.
Sure. Did Hamilton draw on any models from the past, or was all of this catch as catch can?
Yeah, thank you, Bob. Probably the closest model was the Central Bank of England. And so there was an intent to, and so many aspects of Hamilton's bank, in fact, some of the words of the bylaws of Hamilton's bank were drawn fairly directly from the Bank of England, but there were some key differences as well. And in particular, that's where Hamilton, the Bank of England, did not have this concept of branches. So Hamilton was thinking we should have more power concentrated in the whole back to the main office. So the directors really focused on the branch idea, and that's something that carried forward to the Federal Reserve System. We didn't want to have power concentrated in Washington. The idea that we have reserve banks, we have contributions to the monetary policy process that takes place in the regional reserve banks. So I guess the closest model would be the Bank of England, and there have been other central banks that have been around for a while as well. Yeah. Other questions? Well, I'm going to stick around for a bit. Happy to take others. Thank you so much for coming to the Federal Reserve Bank of Minneapolis.